from the outside looking in, one of the really sort of interesting investments was in Zoox, which traditionally Blackbird was purely investing in software, and I believe that was your first hardware investment. Really curious to kind of go back to the early days or the first meeting with Tim and I guess the decision to invest in Zoox.
It was the definition of a magical idea, and all of those things about the second meeting being better than the first meeting, and the detail and the depth of how the idea had been, the depth of the idea, and how much it had been thought through, to the really small details of how the robo taxi would communicate with pedestrians using light and sound, and like that was all in the very first seed round sort of pitch deck of the idea. And so I think Zoox, from the very beginning, had that magical idea that had been thought through and had made so many beautiful kind of decisions around the product, or beautiful decisions around the market, like knowing that you should do a robo taxi service instead of trying to sell the driverless car. So instead of like a Tesla selling for 100 grand and getting 30 grand of gross profit, you operated a taxi that earned $300,000 of higher margin revenue per year, and hopefully that would be last 5-7 years in operation. And so just like to that level of detail of beautiful decision, beautiful trade-off, it was always very magical from the beginning. When we met Zoox, it was just Tim at the beginning. This was before he had met Jesse Levinson, who is co-founder and CTO of Zoox. Tim was in Melbourne. He had, after we met originally, he then moved across to Silicon Valley. So the first pitch wasn't, hey, we're raising a seed round pitch. It was sort of like just getting to know him and the idea of Zoox. And so when he moved to Silicon Valley, we kept in touch, provided a bunch of intros, provided a bunch of like basic kind of, here's the game of Silicon Valley, here's preference stock, and here's ESOP, and these concepts of how a startup is built. Then he teamed up with once he teamed up with Jesse, once he'd formed the company, he got back in touch and said, hey, we're raising our seed round now. And then that's when ultimately we said yes. It was, as you said, it was an uncomfortable decision because we'd only invested in global software. We were a team of, again, nobodies, or hungry, not the proven venture capitalists who had raised a fund on the promise of global software companies. And so to invest in something that was clearly so capital intensive, clearly so illegal. Back in 2014, it was completely illegal to drive a driverless car on public roads. And knowing the billions of dollars of capital that would need to be raised, knowing that they would compete against Tesla and Uber and Google and so on, it was, I think, a brave decision from that standpoint. But I think along each of those lines, you could come up with great reasons why there was a chance, why there was a non-zero chance. And even in the case of Zoox, in that first seed round, we led a $1.3 million total round. Within that round of capital, and within 6 months of the round being wired, they had created a prototype that had demonstrated self-driving ability in the car park of a certain part of Stanford University. So even with that small amount of money, that small amount of time, you could see, again, they'd broken the problem down into these units of progress. And it was just very clear that how the team was coming together, the quality of people, the quality of progress, the speed of progress, all of that, all of those early signs were super, super positive. And so, again, it's to go on that journey. We first invested $500,000 in the seed round. We ended up investing more than $100 million just into Zoox. And so if you view it as that first investment is the exploration. This is a journey worth going on. That's the decision you're making, rather than it's got a majority chance of succeeding or anything like that. I think it's important to open your mind to these types of journeys and endeavors. And if it works out, the first investment will be a tiny, tiny proportion of your total investment. And if it doesn't work out, then you've lost your money, and that's venture capital.
Yeah, I was about to ask, for something like that, as you mentioned, so out of left field from what you normally invested in, at the time, it being illegal as well in terms of the solution that they were trying to create. What does that look like internally in terms of, trying to get that through an investment committee, or trying to sort of convey that investment and your conviction of that to your LPs?
I would also put it in the context of it was 1 year after we raised our first fund, which took us ages to raise. And you've heard the 500 meetings to get to 97 yeses to get to $29 million. So it was in that sense of the difficulty in raising the fund, the story in which we'd raised it on, the sort of, again, hungry, not proven investment professionals of Blackbird at the time. We hadn't, I think, developed the confidence that we have now. We hadn't calibrated all of the things and investment philosophies that are now true at Blackbird. So I think it was in that fragile state such that that's probably what made it dangerous, that we mightn't have invested. However, I would say 10 years on, it might almost seem straightforward for us to make such an investment, which I think, again, knowing all the things that we know about technology companies, knowing all the things that we know about the power law of venture capital, knowing that the first investment will be less than 1% of your total investment if it works out, knowing what is a great idea, knowing what is great ambition. I think hopefully all of those have been institutionalized in the culture of Blackbird and the culture of investment decision making, such that now we would not take very long at all to say yes to a company like Zoox and a founder like Tim.
Yeah, speaking of brave, I believe that Canva was your first or second investment as well after the first close of the fund, which was at a very high valuation as well, which I think turned away a lot of other investors as well. I guess, were there sort of periods that you were a little bit uncertain in terms of the investment approach that you were taking, or I guess having to kind of field questions from potential LPs that were wondering what you were doing?
As part of our reflection on our investing and the very early stage investing, we looked back and I think less than 40% of our first investments in that first fund didn't have any revenue. So the majority of companies, they had revenue, they had early customers, they had a product, and sort of, again, I would say that was a sign of our lack of confidence as an investment team in our own abilities. And we were always looking for, you've launched your product and you have happy customers, and then we'll invest in your seed round or pre-seed round, which obviously is not true of today's market. So I think investing without a product and without revenue, that was a little bit uncomfortable. I think at the time, Canva, the seed round valuation was $8 million, which the average valuation was probably $2 to $4 million or $2 to $5 million, and that was like unheard of, and they hadn't had a product. And even after the angel round, I think it was nearly a year until they launched the product. They sort of thought they would launch a first version, but the quality of that first product and the quality of that first experience wasn't to the tastes of Mel. And so the team sort of decided not to launch at that point and take all the lessons from the user testing that they'd done and to improve the product for an eventual launch. So it was sort of $8 million for an idea stage startup in 2012 was crazy and reckless. And then to not launch sort of until roughly a year later, that was like a period where people were asking questions and so on. But again, those are all the hallmarks of something interesting, and doing something new is going to have that reaction versus it's almost the opposite now, where you invest in a $40 million pre-money valuation idea stage company now, and it's a proven founder in SaaS, and it's a straightforward decision. It's almost like the lack of questions being asked today is more worrying than the overload of questions being asked, in that type of situation 10 years ago.